Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Markets where we left it, right? 24,773 is what it's trading. That's below the 24,800 level. We've not seen any much sharper fall coming in right now as well, but 24,700, 800 around that mark is what we are seeing in terms of the trading coming in for the Nifty. The broader end of the market continues to perform better. Nifty Bank, that's managing to do well today, holding on to that green on the Nifty Bank as well. So 1/10 to 0.2% of gain that we're seeing coming in for Nifty Bank. As of now, some bit of a fall from the day's highest point. So yes, that's something we're watching out for, whether Nifty Bank now will be able to sustain the green in the next 1 hour, 1.5 hours of trading session as well. But yes, that's how the market setup is looking like. Broader end continues to outperform the benchmark indices. But this is a show where we solve all those stock-related queries that you all send us. And to solve that, today we have Astha Jain of Securities, as well as Somil Mehta of Mirae Asset Sharekhan, joining in with us to answer all your stock-related queries. Astha as well as Somil, very good afternoon, and thank you so much as always for joining in with us. Somil, before we go to the queries, a quick check in terms of the markets. Seems like the Nifty is not managing to hold on to that 25,000 mark. Now 25,800, also 850, we touched that, and now we go below that as well. What are the levels we should keep an eye out on, both as a resistance as well as a support?
This is the third week that we are in this range of 500 points range, and I totally agree that we are not able to hold on to 25,000 levels. But the good news is that we are able to hold on to 24,500 levels as well. So that's a good part. And overall, the undertone still remains positive. So I think the strategy should be to buy on declines. 24,500 remains a very, very crucial support. Banking is looking great. So I think from here, smaller banks, PSU banks would be doing great. Stock specific and sector specific should be the focus for some time, probably for another 1 week. And then probably I'll be expecting this range to break on the upside for a target of 25,300, 25,400.
Okay, keeping an eye out on those levels over there for the Nifty Bank, sensex. Keep an eye out on that. But let's move on and get started with all the stock-related queries. And the first query for today coming in from Sulochna, who's writing to us from Kolkata. She's holding 200 shares of Praj Industries. This is at a price of 500 rupees per share. So right now also the stock is trading close to a buy price, but she's bought it around last year. Now she's asking if she should continue to hold the stock for another year. Astha, afternoon on Praj Industries, they reported the numbers as well. I don't think it was that exciting in terms of numbers that came in from Praj Industries. What should the viewer do now? Should they continue to hold it for 1 more year, or do you think this price around that 500 is something that will continue for the company in the next year as well?
Hi, good afternoon to all of you. Talking about this counter, I think viewers should hold this counter with a price target of 530 to 540 at the initial level. Now, why I am asking him to hold this counter? Because what we believe from the management commentary, which they have came out after the result declaration, is that they are still confident of, executing their guidance of tripling the revenue by FY 2032, and that is on the basis of diversification from the sugar-based ethanol business. So I think that is because now management is trying to reduce its dependence on that business. And I think that is the major lever for me, which can be a growth driver for the company in the coming years. So my idea here is that, yes, the results were not in line with the expectation. There was a decline in the revenue, but the kind of commentary which we have seen from the management side, and the management reduced dependence on the ethanol business, will definitely going to provide some cushion to the business performance in the coming time, and hence we are recommending hold on this counter. Price target which we are setting for this counter is 530 to 540 at the initial levels.
Okay, 530, 540 at the initial levels is the price target what you are setting. Somil, what's your view coming in? Because the fall in the stock was quite sharp, right? At the beginning of the year, it was somewhere around the 799, 800 mark. And now today at 490. So, that does give a bit of a worry on that front. What should the viewer do?
In the very short term, it's a small consolidation between 500 and 450, but 450 is a very, very crucial support. There is a multiple support zone at 450 levels. So I don't expect stock to go down below 450 levels and close below 450. I think that will be a great time to buy. My suggestion would be to hold on to this stock, and I'll be expecting this stock to go till at least 600 levels, which is the 200 daily exponential moving average. But this is a medium to long term targets and medium to long term view. In the very short term, I'm not expecting too much from the stock, and probably will be in the range between 500 and 450.
Okay, 500 and 450 is the range in the short term, is what you are expecting for the stock coming in. Let's move on to the next query for today. We have P. Suresh, who's writing to us from Andhra Pradesh. He's asking if he can invest now in NTPC at the current levels. Astha, on the fundamentals, how is NTPC looking like in terms of overall numbers for Q4 FY25? There's a bit of a miss that came in terms of the commissioning target. Commentary overall after that, they said that they expect this to actually come in FY26 would be better. What are we watching out for? NTPC a good bet in this sector, or maybe there are other options which the viewer can look to invest in?
I think why management is confident about the coming years is that the kind of capacity addition they are coming in. I think they have a plan for the capacity expansion of 76 gigawatt, which is currently there, to 130 gigawatt by FY32. So I think this type of a capacity addition, which the management is doing, and with that, what we are seeing that there is a continuous increase in the power demand, and we are expecting it to increase by the 7% CAGR. So I think both these points bode well for the long term or a brighter prospect of this company. However, in the medium term or a short term, the company may not show so much rise in the stock prices. But in the longer term, we are confident of this company to move till the level of 400. However, at the initial level, we are giving the price target of 380. So my idea here is to add this counter and keep the price target of 380 to 400 for the long-term perspective.
Okay, that's the view coming in on the fundamentals front for NTPC. But on the technical, Somil, what's your view coming in? Is this a good price to enter NTPC? Because somewhere around in Jan, beginning of the year, also it was a bit lower than this, also around the 300 mark. So should we wait out for that? Do you expect a bit more of a fall? Or this is a good entry level right now?
This is one of my favorite stocks to invest, actually. Large cap in the uncertain markets. NTPC always performs well, stays, it was consolidating. It is still consolidating in a range. However, at these rates, I think it's a great buy. The bounce which we saw from 300 to 370, the entire bounce was an impulse. And I think now we'll be expecting a new all-time high. This is a great time to buy, and 300 levels would be the stop loss for me. I'll be expecting in the very short term, I'll be expecting 370, 380 levels. In the medium term outlook, at least 400, 410 levels in the next coming probably couple of quarters.
Okay, keep an eye out on NTPC. It's Somil's favorite stock, so the disclosure also comes in there from Somil as well. But yes, NTPC can look to buy and keep an eye out on those levels over there. Let's move on to the next query for today is coming in from Matthew, who's writing to us from Bangalore. He's saying that he's holding 500 shares of Eternal, that's Zomato, known as Zomato previously. Price is 240 rupees per share. So he's asking whether to stay invested or sell at the current levels. Astha, obviously we had seen those changes that came in the index as well, and some bit of an outflow that came in from Zomato because of the changes in the MSCI FTSE as well. So what are you watching out for right now from Eternal, and should the viewer continue to hold these?
I think viewers should continue to hold this counter, because what we have seen in the fundamentals, if I talk about particularly, that the Blinkit is showing very, very strong performance. Despite of the fact that there was a dark store addition, we have seen there was an increase in the contribution margin, or a contribution margin expansion was there. In fact, their GOV has also shown an increase. So I think that this counter and whatever losses they have shown, I think this is the peak losses which we are seeing right now. And going ahead, we expect the company to show some sort of reduction in their losses as well. So my idea here is to stay invested in this counter purely on the basis of fundamentals, and we are giving a price target to 260 to this counter as of now. So stay invested in this counter.
Stay invested in the counter. That's a word on the fundamentals. And on the technicals, is that a similar trend that we are expecting there as well?
For Eternal, not very bullish on the stock. Low top, low bottom formation in the short term, in the medium term outlook as well. There was a small consolidation which has broken on the downside. So even in the short term, I think the sell-off will continue. The next level in the medium term outlook would be 190, 195 levels, which will be previous swing lows. So I'm not very bullish on in the short term, in the medium term outlook both. The resistance would be around 240 and 248.
Okay, not too bullish on Eternal on the technical front, but fundamental continue to keep Eternal. That's a view there. Let's move on and talk about Cochin Shipyard. That's the next query coming in on, and we have Gaurang who's writing to us from Chennai. Holding 100 shares of Cochin Shipyard, price is 1,464 rupees, making a profit on this one. Future prospects of Cochin Shipyard as an investment proposal. Your view, Astha, Cochin Shipyard, the shipbuilding stocks, defense side, all this comes into play, right? And we have seen them buzzing in the last 1 month specifically. What is the view now?
So view is positive because the kind of order backlog these companies are having, they have got a very strong order backlog, especially if I talk about Cochin Shipyard, 5x of FY25 revenue is the kind of orders that they are having right now. So strong order visibility is there, capacity expansion is there, and they're getting good orders from the ship repair front or a ship repair point of view. So I believe that it is a good stock to remain invested in, and hence recommending a hold with a price target of 2190 to 2200.
Okay, keep an eye out over there for Cochin Shipyard, 21, the levels that Astha mentioned as well, 21,190. But on the technicals, what are the levels that we should keep an eye out on? And is the chart on the technical level still indicating a run-up?
Absolutely, I'm bullish on this Cochin Shipyard. There are other stocks as well and defense sector, but Cochin Shipyard has just started the momentum in the last couple of weeks, and I think the momentum should continue. The medium term outlook would be positive. Short term outlook would be positive. Medium term targets would be around 2400. Short term targets are definitely 2150, 2200, which Astha also mentioned. Support would be around 20 daily moving average. 1720 would be my stop loss in the very short term, and buy on decline should be the strategy. Absolutely, every time it takes support at 20 daily moving average, it starts moving on the upside with good momentum and very good strength.
Okay, that's a view coming in there on Cochin Shipyard. But on that note, we're going to slip into a very short break. But as we slip in the break, we are excited to unveil a brand new global business news channel. The all-new CNBC-TV18 Prime brings you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC-TV18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 p.m. Welcome back to Your Stocks in CNBC TV18. Let's keep it going with all your stock-related queries. And our experts for today are Astha Jain as well as Somil Mehta, who are still with us. The next query for today coming in from A. Subramanian, who's writing to us from Chennai, holding 100 shares of Kolte-Patil Developers. Price is 552 rupees per share. He's asking whether he should book his losses or stay invested in the stock. Astha, he's bought it at 552. Kolte-Patil Developers. There's so many, announcements that come in on the development side as well. So much happening across developers, right? They're entering new areas, new geographies. Premium continues to do well. Kolte-Patil Developers, stock move is not that exciting. So what should they do?
I recommend to hold this counter. There is no need to book losses at this point of the time, because what we believe that this counter has the potential to move upwards in the level of at least 460 to 480. So I think it's better to remain invested in this counter. Now, why we are so much optimistic? because what we have seen that the results were exceptionally well. And in fact, what the management is confident about is that they have seen a very strong or healthy registrations, customer engagements, and in fact, they have signed 122-acre JDA joint development agreement in Pune. So I think all these developments which are going on in the company will definitely yield a strong results to the company, despite the fact that we know, in fact, they have seen some healthy increase in their pre-sales numbers and their realization number also, because their realization has improved by 8%. So overall, what I find is that results were quite good, and this is the stock to remain invested in. Although not a very strong bet in the real estate space, but yes, there is no need to book losses at least. So idea here is to hold this counter with the initial price target which we are giving is 460 to 480 levels.
Okay, keep an eye out on those levels over there for Kolte-Patil Developers. Hold because the numbers were good. Commentary is also good, is what Astha is highlighting on the fundamental front. Somil, on the technicals, what's the story that's playing out for Kolte-Patil Developers? Last 1 year, obviously till Jan-Feb, we saw it seeing a bit of a decline, and then that recovery has started coming in. So what should the viewer now do? Though they are making a loss on this one, should they continue to hold?
I think we should continue to hold till the time it holds the 200 daily exponential moving average. It's been almost the market, this stock has been below 200 daily moving average for a very long time, probably more than 6 months. And very recently, in last couple of weeks, it has moved above 200 daily moving average. And I think that's a very good sign for the stock, a high top, high bottom formation on the weekly chart as well, taking support at the averages. So overall looks great. Should not book out from here. Hold on to this stock till the time it is above 200 daily exponential moving average, which is 357. That will be my stop loss in the medium term outlook. And on the upside, I think the targets would be around 460 and 480 levels, and that's the time probably you should book it out. I like Lodha and Oberoi more than Kolte-Patil, so probably you can switch it that time.
Okay. You can look at that as well in terms of switching also. Somil is liking Lodha more than Kolte-Patil, but keep an eye out on those levels that were mentioned there. Let's move on to the next query for today. We have this coming in from Gautam, who's writing to us from Mumbai. He's asking what is the view on Aditya Birla Sun Life AMC for the next 12 to 18 months, fundamental as well as technical levels, and wants to know if it's okay to buy at this point of time. Fundamentals first, Astha, your view?
Fundamental seems to be strong for this counter. So I think, yes, one can buy on the dips as well as remain invested in this counter for the price target of 780 to 820. Now, talking about the fundamentals, what we have started seeing again, there is a rebound in the SIP flow. So that is acting as a major positive. And in fact, this counter has seen a market share improvement across the segments because 85% of their funds have beaten the benchmark. So I think that has also created an attraction for this company. And I think going ahead, this will perform strongly because in fact, capital markets have started showing some sort of positive momentum. Overall, long-term prospect seems to be okay for this counter. Remain invested in this counter, or buy on dip strategy can also be applied. However, we are giving the initial price target of 780 to 800.
Okay, keep an eye out on those levels over there for Aditya Birla Sun Life AMC. Somil, on the technicals, also does it merit a buy?
In the short term looks great. It's just, I think, broken out of a small consolidation. Very a good risk reward, a very small stop loss of 721, and I think the targets would be at least 780 levels in the very short term. In the medium term outlook, the support should be around 20 daily moving average or 200 daily exponential moving average, which is around 678, and the targets would be much higher, probably around 860, 850 levels. So that would be a good level on the upside for the medium term outlook.
Okay, keep an eye out on those levels over there. Good chart on the short term as well as what the highlight is coming in from Somil. Let's move on to the next query. We have Ritu Ahuja, who's writing to us from Pune. She's holding 60 shares of Delhivery, and this is at a price of 270 rupees per share, making a profit on this. Wants to know whether she should continue to hold or book out her profits. Astha, your view, Delhivery?
Continue to hold this counter with a price target of for 400 at the initial level, 400 to 420 at the initial level. Now, talking about this counter, yes, we have seen their B2C segment growth was muted, but PTL segment is looking good to us, and in fact, some market share gain is also there in that segment. So we believe, and in fact, they have done the acquisition of Ecom Express. So I think that is also now started helping the company in showing good numbers going ahead. Overall, we are positive on this counter and hence recommending good with a price target of 400 to 428.
Okay. On the charts, Somil, your story, what is it playing out there? Because last 1 year, 15% decline in terms of a stock move. Though last 1 month or so, we've seen some bit of an up move coming in. Does this indicate that we could see a bit of a breakout here?
It's a breakout definitely in the medium term outlook, but if the trade is for short term, then this is the right time to book out the profits. But if the trade is for a medium term outlook, you can definitely hold on to this stock with a stop loss of 330 levels. And on the upside, I'll be expecting at least a target of 400, 420 levels. So that would be my medium term outlook levels, and the stop loss should be very strict because we've seen a very sharp decline in the stock, and if it hold on to 200 daily exponential moving average, then this medium term breakout could lead to very good levels on the upside.
Okay, medium term, you can continue to hold 400, 420 is what Somil has highlighted. Short term, then get out of it, book your profit out. That's the view there. But that was the last query for today. So Somil as well as Astha, thank you so much for joining in with us and helping our viewers solve all their stock-related doubts. Thank you so much, viewers, for sending us your query. Keep sending them to us. You're seeing the email ID that's flashing on your screens as well. So you do send us your queries and we'll solve them Monday, Wednesdays, Fridays on CNBC TV18. But with that, we'll wind down this edition. Thank you so much for tuning in. Up next, we have Closing Bell to take you through the last hour of trade.